Welcome to the In the Arena podcast. My name is Jared Miguez, a co-host on this podcast that brings you the inspiring stories of our clients who are leaders and innovators across different industries in Southeast Louisiana. They are visionary entrepreneurs, savvy real estate professionals, media creators, military business owners, and community champions. And we are going to showcase the remarkable achievements and share their personal stories. Tune in for insightful conversations, valuable lessons, and motivational stories that are going to reveal their secrets to success and offer you insights to help you on your own path. Welcome to In the Arena podcast. Well, welcome to the In the Arena podcast. We got a longtime friend, longtime banker, Shane Purvis here.
Thanks for having me.
Longer time friend to Lauren. I just want to make sure that that's clear.
She
always have that caveat, you know?
Yeah, that's very
Back
true.
in Slidell, hair salon days, absolutely. And then his mother, who is just the queen of Our Lady of Lords for all the young kids.
That she is.
But my daughter Dylan as well. So.
Well, I mean,
I get to go to mass with your parents every Sunday.
Yeah, well, I used to make the joke all the time that, when I went to college, I had to go and not stay at home because literally either my dad had lent people money or my mom had taught them. And so
Yeah, pretty
I
much.
Get away with anything.
Yeah.
So
pretty much.
Yeah, so yeah, we definitely go way back.
Yeah.
For doing homework in your living room.
Yeah.
Growing up to, y'all are our pre-Cana sponsors.
We did.
So,
We
yeah.
prepared him
that's
for
awesome.
marriage,
Yep.
me and Jason.
Yep, Jason and I were altar service together, so we
Yep.
go way back.
Yeah. Well, Lauren has a saying that she always says that for pre-Cana that's inappropriate. And if anybody's listening, you want to hear it, we say it off camera or it's not recorded. But
Right.
it's pretty funny. And I think it's very true.
I think we were the first people that you probably used that line on. I'm pretty sure I know what it
Probably.
is, but we can talk about that offline later.
Well, I want to give the audience a little taste of what we're going to talk about today because I think it's important. And our ideal person that is listening to this, or people that we know are listening, are business owners looking to grow, or people who want to get into business. And we've talked a lot about things. You even alluded to a conversation we had with Julie Long about finances. And what the great part about this is we're going to look at it from a different perspective. She's a CPA, but it's a lot of the same concepts and ideas, but we're going to talk about why they're important in a banking scaling mindset, mentality, and stage of business like that you impact people on. So before we get into how SBA financing is helpful to businesses, I want to give people a background of who you are, because in my mind, you're an expert. I know you're going to humble the situation, say you're not. You're just been doing this for a long time, 18 years, but you are, in my mind, an expert in SBA financing. So tell us a little bit about who you are. You're from Slidell, and what you do at Bonvenu Bank.
Sure. So, born and raised here on the North Shore, and been in the finance industry, like you said, for about 18 years. Of that time, probably about close to 15 of that has been in the business lending kind of arena, whether it was training bankers to be bankers and how to structure a small business loan or put things together, try to understand how credit works and interpret financial statements, to actually being a producing lender, and now at Bonvenu helping us to launch our dedicated SBA lending program. So basically, we've got 20 plus lenders between Southeast Louisiana, Northwest Louisiana. Any deal that requires some type of SBA assistance on it to go through comes through me.
Gotcha.
And so that's kind of my role within it.
Yeah.
And it's great. And if you haven't heard of Bonvenu, which I know a lot of people kind of reference, it's because we kind of made up the name, right? Right about a year ago. We actually celebrate our 40-year anniversary or birthday this month. So we're excited. We have a lot of fun things planned for that. But when we were founded up in Northwest Louisiana, we were known as Citizens National Bank.
Okay, very
and
cool.
as you would probably know, there's over 170 banks with Citizens somewhere in the name.
Yeah.
We're finance people. We're not notoriously creative
Yeah.
in many instances. And so, as we started to expand and realize, look, there's Citizens in every market we play in. I go to chamber events, right?
Yeah.
We serve on the chamber board together. And you tell somebody where you work and they go, oh, this one? No. This one? No. So
The green one, the red one, the blue one? Yeah.
Yes,
Yeah.
exactly, right? We were the other blue one.
Yeah.
So it was really nice when they came and kind of announced this project, and there was a lot of anticipation,
Nice.
excitement about it, and they released a brand. And so Bonvenu, it's a word that is kind of a hybrid, bon for good and bienvenue for welcome. So Bonvenu
Nice.
is the name. So we came up with that.
So a nice warm welcome.
Yep, nice warm welcome. That's what we want
Love
people
it.
to experience.
Yeah. I also also like
Very
the
cool.
crown and the logo too. I haven't quite figured out how to incorporate a crown into any of the arena stuff, but at
Sure.
some point in the future, I'm sure I will figure
What's
that
the
out.
crown jewel in the Louisiana financial institution sector, right? That's kind of the way we looked at it.
Nice.
And some people see a bridge in it as well, and there's a million bridges here in Louisiana. So
Yeah.
kind of looked at it. We're bridging the gap between north and south. So
Nice.
That
Very
was
cool.
kind of the thought behind it.
I appreciate that because all these people that come in here,
Yes.
born and raised in Southeast Louisiana. I'm from Alexandria, so I like the fact that you're bridging the gap. We're doing a little bit of that here today.
Right? Exactly.
Very
Let's
cool.
do it.
Womp womp. Go Slidell.
Yeah.
All right.
So, so there's a lot of different things that that you can use SBA financing for.
Sure.
But just talk about what SBA financing is in general. What does the acronym mean, and when can it be used, and what can you use it for?
Sure. So, I mean, there are so many misconceptions about SBA lending in general and SBA financing.
Amen.
And the biggest myth that's out there, right, is that SBA means a guaranteed approval for anything, right? That's not the case. And there's also a myth out there where people think, oh, well, an SBA loan, it's 30 years and it's incredibly low below market rates and all that sort of stuff. That's disaster assistance financing, which the SBA, the Small Business Administration, administers. That's not what we're talking about when we talk about business startup, expansion, acquisition, real estate development, whatever the case may be. And so, first and foremost, that is the biggest misconception that people have about it. When we talk about you trying to grow your business, expand your business, and utilizing an SBA program, they have a variety of different programs out there. And what they're using those for is to help offset risk to a financial institution. So if you have a bank that, let's say they have certain parameters that they can lend within or up to, and your file doesn't quite fit, then it's subject to being declined. However, if you have someone who's knowledgeable about SBA and how to work within that system and the parameters of those programs, then you may be able to get a little bit longer of a maturity than you would otherwise need, which will help your cash flow meet your repayment cycle. Or maybe it's a slightly lesser equity injection than you would otherwise need. Whereas maybe you need a 25% equity injection. Maybe the SBA can help us whittle that down, get us closer to 15%, 10%, or higher in some instances. So that's really what it's used for. It's also used for those instances where maybe you have a lot of experience in the industry, but you've never run a business. Well, there's some risk appetite in there that we look at and say, man, we might just need a little bit more assistance to help us get comfortable enough with getting this file across the finish line. Yeah. So, in banking, and actually, one of the people in my industry who taught me really everything I know about it, used to have the saying that an SBA loan will never make a bad deal good. It will make a good deal possible. And that's what we look to use this for, right? Is to
like
find
that
those
saying.
opportunities that it makes sense to do. We've just got to find a way to get across the finish line.
So as a bank standpoint, when you're looking at this situation, the SBA is just the government assistance that kind of protects the bank in the case of worst case scenario and allows them to
Yeah,
have
it's
a little,
federally backed. Yeah.
Yep.
Gotcha. So it's a safety net for the bank. It allows the bank to feel more comfortable assessing the risk, right? I tell people all the time, whether it's private lenders or whenever you're going to a bank and you're trying to convince somebody to lend you money, you have to understand what they're looking at from a risk standpoint. How long is the loan going to be outstanding? How much money are you borrowing? Less is better for the bank. And then what if you do have a risky amount or the longevity of the loan, then your interest rates can be higher because they're offsetting the rest of the income they're generating. So you have to understand which levers to pull to help relieve the bank's risk. And if those three things are maxed out, you're telling me that the SBA will come and maybe look at the situation and help out.
Yeah. And, a lot of times when I talk to a client, right, I try and help paint that picture for them when I'm trying to explain risk to them and risk mitigation and our perspective on it, versus what they might actually see on a day-to-day basis. And I'll just use an example with them of, well, who's your top client? And let's just say it's a big national brand that pays like clockwork on time. They got a great accounts receivable or accounts payable, department. And that cash flow's coming in. It's great. That's low risk. You're probably giving them favorable pricing. But then all of a sudden you have someone new enter the market and they're really looking at you to say, hey, I need you to be my main supplier. Or I need you to provide this service to me. By the way, I need you to give me net 90 payment terms. It's going to take me a lot longer to give it, and I have no history to back it up to show that I can deliver on paying you back. You as a client are probably like, do I really want that in that case? So we look at risk, right? At the end of the day, that's what it is. And SBA is just a tool that allows us to hopefully say yes a little bit more often.
Gotcha.
So you mentioned like there's programs that you can fit within because there's a bunch of different types of SBA loans. So are there any particular ones that you find work really well in this area or any particular industry that you'd like to highlight?
Yeah, I mean, so, first and foremost, to be eligible for an SBA loan, right, when we're talking about business expansion, startup acquisition, all that sort of stuff, you've got to be for profit, first and foremost. You have to be organized for profit, right? So it can't be speculative investment. I get the call all the time. Hey, I've got an investment real estate portfolio I want to buy, and it's a bunch of 1 to 4 families, and I want to snack this up on an SBA loan and put 0 down. It's not eligible. It's not a
Not the right
purpose,
tool.
right? Yeah, it's
Yeah.
not the tool for it. But they have a variety of different programs, right? From the 7A, which is kind of their flagship. It's what most people know them for, which can do a variety of different things. And it's used primarily with those acquisitions. It can be used for acquiring real estate for your business to operate out of. If you need to refurbish it or build it from the ground up, you can use it for those sort of things. You can also use it for permanent working capital, financing fixed assets like equipment, all that sort of stuff. So you can use it for a variety of things. And the SBA 504 program, which is a very popular program, has some unique benefits, which I know we're not going to get into the weeds on it today, but that one is especially used with real estate and fixed asset financing.
Gotcha.
It's a really good program, and in a lot of cases, if there is a business acquisition, if those are parts of it, then that may have a use for it as well.
Yeah.
But then there are others that are dedicated specifically to working capital, specifically to helping you maybe finance contracts, things of that nature. And so it just depends on what your unique case is and what program is used. I'm not a fan of the one size fits all, put someone in a box and figure it out. We need to understand all the variables and figure out, well, what programs can this actually work and then which one's most advantageous for you to use.
That's what makes you the expert.
You keep using that word.
So I got 2 questions.
I appreciate it.
Yeah. So 2 questions. So if you're working with a bank, would you say that the SBA program is something that you would want to have as a secondary option for a bank, or is it important for you to have a relationship with a banker that also can do SBA financing? Because when I'm talking with somebody and they're telling me that they bank with Capital One and they're a small business owner, nothing against Capital One, but you're not going to be able to build a relationship with a banker there like you would if you have a local bank. And so I try to encourage people to go find a local bank in conjunction with Capital One that you can have a relationship with somebody in the case you need lending. And so my question is, if I have a relationship with a bank and then I can't qualify there, do I then go to my SBA person, or is it important to have a relationship with Bonvenu Bank now so that when you need the SBA option, they can plug you in?
I mean, I would say you definitely want to have your relationship where you plan to grow your business, right? When you're splitting that basket up, and I know a lot of people talk about, I don't want all my eggs in one basket. And there are a lot of reasons for that and a lot of very valid reasons for that. But if you really look at it, the place that's taking the risk on is also the place that's going to want to see the relationship. They're going to want to see the cash inflow and outflow and understand your operation. They're going to want to make sure that they have a good idea of how you truly operate. And so if you establish that relationship early, well before you actually secure your financing or request your financing, then you're in a much better position, right? And you can talk with that banker and say, hey, what do I need to do to put myself in the best position to qualify for this request? So that they can help kind of work with you and guide you, hopefully work with your partners, right? Your CPA, your attorneys, your financial advisor. To me, you should always have that kind of 4-person team, right? Your banker's included in that team. You can work together on, all right, well, where do we want to be? And what do we need to make sure that we're doing so that we can get there? I highly recommend that. And, a lot of people don't realize it nowadays, but a lot of the much larger banks, right? They own a lot of proprietary software. They have some great technology and all that sort of stuff. But technology's become cheaper. It's become easier to access. And so a lot of your community banks and places have invested in these same technologies to where you can do all the same stuff by and large,
Yeah,
right?
it was online banking for the longest time, right?
Yeah.
Everyone's like, I have to move to a bigger bank because online banking, I can hire less people. Well, now it's accessible to everyone.
Yeah.
And it's not so much that the relationship that you build at these larger banks can't be a good, stable relationship. It's that those bankers' hands are tied. They have less ability to affect your end loan product.
Yeah.
I think that's the biggest key with a smaller bank. And I mean, you can speak more to that because you've been in the industry for a long time.
And I'll
can definitely
piggyback on
attest to
that.
that.
I mean, it was a loaded question because I had a client of ours, and I hope he listens to this because he asked me, how do I go to a bank and get a more favorable cost for my financing? And I said, well, you got two options. You can pin everybody against each other and make them all try to whittle each other down and have a competing and be the guy that nobody wants to do business with. Or you can build a relationship with somebody that is deeper than that you can say, hey, this deal, I need you to shave off a little bit on the financing fees to get this thing set up because I need a little bit more. I need a little bit more money in my pocket for right now. And so I recommended to him, I said, and he actually, I gave him the two options. I didn't say anything. And he was like, I like the loyalty option. I'm like, I think it's a good idea.
There's so many reasons. And then also they need to see accounts on hand. I mean, all of banking right now is deposit accounts. And so when you're making a decision, you're going to get the most favorable terms where your deposits are held. And so, that's a very clear thing. Now, if you're lucky enough to have large deposits that you can spread, then you can pick your top two best relationships, right? And then still get that diversified aspect of it. But the significance in showing that relationship loyalty is by giving them deposit accounts. Yep. I mean, I'll let you verify that, but that's the way I look at my banking relationships. And so if I need something in that moment, I'm going to ask for that reciprocal respect from the person that's holding the bulk of our deposits.
Yep, that's absolutely true. And, when you have that type of instance, right, where someone is just full on rate shopping, right? We're in the relationship business at the end of the day. That's really what it's about. And when you know that, when it's, whether it's your terms are being passed around everywhere to kind of say, hey, well, can you beat this? Or, if it's just like, that they're going knocking on every door and calling, then it's harder to justify if you do want to try and make some type of exception, right? As a banker to say, hey, look, this person's doing X. I want to, put it in based on these reasons. It's harder to justify that and ask for it if you know that, well, then 5 minutes later, they're going to come back and say, oh, well, this one across the street offered me this. It just doesn't work that way. So it's all based on relationship, mutual trust. And, if you have relationships in different places, it happens. We understand that. But at the end of the day, if you're asking someone to take the most risk on and help you with backing your business, then that's really where you should also be doing the vast majority of your banking.
Yeah.
So I want to talk a little bit about the actual process, right? So we referenced Miss Julie's episode, and I think that's because we talked a little bit more of a process of what is needed on her end and how it can help businesses grow from a CPA controller standpoint. But from a banking standpoint, what can people do well before they or even have a project that they want to work on? So like we're an established business, been around for 3.5 years. No telling what we're going to have that present itself to us next year. But for us to put ourselves in the right position in order to be able to take advantage of something and potentially use SBA financing, what do we need to do now with our banker to be prepared?
Sure. So, the first thing is to begin building yourself an internal file, right? And that internal file needs to consist of a few key things, right? Your last 3 years business returns, right? Your last 3 years personal returns of all of your owners, right? Who would be guaranteeing or be a part of that deal. And then just updated personal financial statements. A few years ago, my personal financial advisor, he challenged me. He's like, man, you look at everybody's personal financial statements. Do you do one for yourself? And I'm like, I'm not really self-employed, so I don't do it as often, right? And he goes, I challenge you to do it at least once a year. And so I started doing it, and it turned into a game for me so that I can make decisions based on where I currently am and where I know I want to go to make sure that my net is growing with my net worth, or I'm whittling down liabilities, or I'm gaining assets, and just trying to make sure that I'm moving in that right direction. So even if you're a ways off on a project, right, putting those things together and then having your year-to-date P&L and your balance sheet, and if you have a cash flow statement, put those three things together as well, because those are key to your business, especially in the interim for you to make decisions. But if you have just those core financials together, you're ready to drop it to a banker when they send you their secure upload link or, whatever the case may be. And they can look at it right there and say, oh, well, is this what you're talking about? This is kind of where you're off.
Yeah.
Work on your margins, do this, look at those sort of things, see where you can execute some more cost control.
So when you talk about that 4-man team that you have, your attorney, your CPA, financial advisor, and your banker, you're providing those statements to them once a year so that they can look at it and see, okay, if you're going to be looking at a project, you're looking to grow and scale, and you're still in that mindset, these are the things that you need to meet with your CPA on to make sure that you're dialing that in, or you need to make sure that your team knows that y'all might need to shave a little bit off of your expense record for this year, or so that next year you're ready.
Well, it gives you a dose of reality and some forecasting and planning. I definitely wrote down cash flow, financial statements, and tax returns. But I always, when a business is coming to me and saying, I have this, I need you to put together this LOI, I immediately start talking to them about, okay, how are you about to purchase this? Are we doing this LOI as seller finance, or are we going to be getting a loan on it? And we immediately start talking about where the deposits are held. Because even if you don't have those clean financials, but you have healthy cash flow that can be shown through your deposit accounts, that's the bank we're going to talk to first. Because it's a headache to put together clean financial statements when people haven't otherwise doing that well, right? And then closely held companies.
I loved
live
Julie's
out of them.
recommendation. Once a quarter, have it reviewed, have it looked at if you're doing it prepared internally. The amount of times that we ask somebody for those statements, and it's, let's say it's November. Oh, well, they haven't looked at it since last tax season. So they're going, man,
I know.
6 months.
what hasn't been cleaned up? Like what hasn't been done? And if there's any delay, and I don't care if it's SBA or conventional financing, it's generally because of a lack of information
Absolutely.
with
Every
current
time.
financials.
Every
That is
time.
what delays almost all.
And then they
of
can't
the
prove
requests.
income at that point, especially with closely held businesses, because they're living out of their business, whether we like it or not, right? And so
we're gonna talk
dissecting
about
that,
that from a
that's a hard
preparedness
part.
standpoint.
Yeah, and if you're doing the proper work on a quarterly basis and assessing it, not only are you forecasting for your tax liability, but you're seeing your financial situation accurately so that you can plan for the projects in the future.
Yeah. I mean, and when it comes to acquisition, right, you're talking about this from really two sides. And I love acquisition because there's a little bit more emotion tied to it, right? There's a little bit more meat on the bones, and there's more historical fact, right? One of the biggest things that the SBA requires for the new owner to provide is projections. And like if you're dealing with a startup, projections, you're getting book reports, right? For like all this market data and research and peeling through it and trying to
But
figure
no
out,
direct data.
how are they going to meet these numbers, right? Well, it's a lot easier with business acquisition. You've got historical financials to look at. And from the seller's perspective, they need to make sure if they're 5 years out from selling, then they need to make sure that they're starting to get their books all in order. And if they're living out of their business, they're making sure that those are clearly identifiable and marked items that can be added back when it comes to business valuations or, reviewed for cash flow.
Because it's a
big
fallacy
challenge.
that you can't do that without paying more taxes. There are ways to do it, and there's ways to do it eloquently over time. That isn't a big hit, but we see that problem all the time.
Yep. I mean, if I ever see a business acquisition deal fall apart, it's probably due to those financials not being prepared correctly, right? And that leads to a very low valuation. And so then both parties can't get what they want, right? At the end of the day, or someone has to come out of pocket substantially more than what they really should be, on that business based off that value. So it's definitely something where the seller should be doing those things, right? Putting together their last few years of tax returns, doing all of their tax planning, and making sure their books are nice and clean and easy to digest well in advance before they ever list it for sale.
Yeah. So what about acquiring or developing real estate? Owner-occupied space, which you've mentioned before. So what's the benefit of the SBA lending as opposed to conventional lending? Is it, again, just that assessment of risk based on the business's position and longevity, or are you looking at something else when it comes to
Sure.
risk?
Yeah. I mean, that generally is. I mean, a lot of times when you're looking at business acquisition using SBA, right, you're usually using it because even if real estate is involved, someone's also buying the general intangibles, right? They're buying the cash flow, essentially. And so you're buying a client base. You might be buying inventory, equipment, whatever else is there. And that doesn't always show up in the real estate appraisal. And so you may be looking to utilize SBA on the entire thing, which would allow you to potentially get those longer terms, right? If it's real estate, SBA will go up to 25 years on a fully amortizing term.
No balloon feature in that?
No balloon feature, no. And so, that's certainly a benefit. You may see, depending on whether you have either a fixed or a variable interest rate, your payment could change if it's variable, and that's a very common thing in this industry because you're looking at it as 25 years. That's a long time in the commercial world. Commercial market is ever changing, and a lot of times people look at it and say, well, I want a 30-year fix just like my home. It's a completely different market. It's a completely different world as far as structures and terms go. Yeah. So sometimes that can be a shock, when you start talking about that with people. But, the advantages are really in that potentially slightly lesser equity injection depending on the file and the risk associated with it, and then that longer term that could be there. And so, that can certainly help.
Yeah. I know when we built this building initially, we did an SBA loan for a construction project. And I mean, we deal with financing all the time, not directly but as a title company. And I did not find that it was overly cumbersome or burdensome. I mean, obviously we're asking for financials and things. We provided all that. But it was not a very difficult process.
Real estate isn't, the hardest one.
Real estate really isn't. It's when you're dealing with those general intangibles, the cash flows, the things that you can't really touch, right?
The goodwill,
that's when it gets a little bit more
client management.
Complex
and
nuanced.
The reason I was bringing that up is I think there's a mentality of people and business owners that SBA financing is hard. And I want to kind of offset that and maybe talk about when it's hard and why it's hard and when it's not hard. And we talked a little bit about what you can do to help it be easier. But what's the real difference between a conventional loan and an SBA loan? Not generally speaking, we've talked about that, but I'm talking about when it comes to practically trying to have somebody apply for that.
Well, what's funny about it is there's not. There's really not. I mean, when you look at your core financials, they're basically the same, right? There might be a few slightly more nuanced, items that you need. There are a few more disclosures that we do. Part of the way that I try to operate it at Bonvenu is I am the person moving the SBA piece forward for our bankers and for our clients. And so I'm involved in their transaction from birth to death, right? The moment that thing's paid off, it's off our books, then that's when I'm out of it. But I'm there from the beginning. And so part of it is helping to manage and package this deal to say, okay, well, here are the forms that we know we need to capture. Here are the disclosure statements, the certifications, all the things that we need to gather on that end, making sure it's all compliant and meeting all those different qualifications. So as far as the client is concerned and the banker is concerned, they're really just gathering their standard documents. They're putting things together, and I'm just double checking it with them to make sure that all of the terms and everything match what it should be.
Gotcha.
To have a compliant
I always
file.
Thought of SBA loans as just an extra tool that keeps you in the game.
It really does.
When you cannot go and just ask your banker that you have the relationship with, like, I need this loan, and they say, long-standing relationship, you've shown your success, your finances are clean enough, and I see your cash flow in the account. Cool, and let's get you signed up. When they're like, I'm not quite sure, let's talk SBA. That's how I've always looked at it. So when we tell a client, like, okay, you're going to be financing this, it's not you need an SBA loan. That's not the first answer. It's, okay, you're getting a loan. Go talk to your banker about what that loan's going to look like. And SBA just happens to be that product that will work oftentimes when you otherwise, don't have a very strong case for an easy loan.
Yeah, and that's really it. I mean, that's it in a nutshell. One of the things that I guess I've always tried to encourage people to understand is when they call me, because they see the SBA moniker and they just go, I need an SBA loan. But that's that misconception, right?
Yep.
That's 30 years fixed at sub 4%. That doesn't exist in the actual marketplace. I wish it did, but it doesn't.
Predicting something, Shane?
What was that?
Are you predicting something?
Oh, no.
No, that's
I'm
just trying to put something in the universe.
No,
It's definitely not a prediction.
But that's why people call and they think of it. And so, my initial, response is not to say, great, let me talk to you about 7A or 504, because that's not being a consultant, right? That's not being an advisor. It's not being an asset to them. It's saying, tell me about your project. Let me understand your financials and your current, world, so that I can see what programs fit.
Yeah.
And if it fits, it fits. If it doesn't, that's okay too. There might be another avenue, but that's the worldview that we try to take on it, because at the end of the day, we're about getting repaid. We're not about collateral. We're not about trying to find other ways to get repaid. We just want that monthly note to come in and our clients to be happy, and to, at the end of the day, make sure that our clients who deposit money with us, we don't incur such a loss that all of a sudden they would see their rates affected or other things affected, right? That's how we do business.
For sure. So 2 more things I want to do ask before we wrap up. Like when you're talking about meeting with the attorney, the CPA, the advisor, and the banker, another thing I think business owners think about or worry about whenever they're getting prepared to do a loan in general is that they're going to have to spend so much time working on those things. And I want to hear from your perspective and your perspective of what a value it is to have those people in place earlier and meeting with them regularly, and how those professionals that you have can take a lot of the heavy lifting off your plate, so that if you put them into the game and they're all on the same page because they have a relationship, that they can do a lot of heavy lifting so you can operate your business.
Sure.
Am I on pace? On track
I mean,
for
we
that?
have personal examples. We've had clients that we've shared, and before I spend their money and draft a document, I'm like, who you been talking to, Shane? Great, let's call him. Get on the phone. Like, how do you plan on structuring this? This is what I'm thinking. And we're bouncing things back and forth on how we want to structure the legal documents in accordance with how he plans to structure the loan for underwriting, so that everybody's on the same page from the beginning.
And the client's not in that conversation necessarily.
Sometimes yes, sometimes no.
Yeah, so they don't have to
Yeah.
be. So they can go off and do what they do and work on their business while y'all are helping more strategize and present them with a plan.
Yep.
Right. And I think business owners that are looking for these types of things are thinking about how much is this time is this going to take? Like, am I dreading having to go through my financials? But again, you have the team in place, the four-headed monster that can really help you. You leverage them so that you can continue to do what you do best and let them get you set up to take advantage.
Well, it's critical to do that, right? Because one of the big philosophies in SBA in general is when you're putting a package together, or let's say you put your business plan together, if you say something, you should have something in your documentation to support it. So if you say, hey, I'm going to, or I'm experiencing this return of X, well, then what report do you have that shows it? Or I have all these receivables. Well, do you have a receivables aging report to support it? We need to be able to understand that. And so if you're putting this together and you're putting your plan together and all those people are in play, then it's very easy for me to say, hey, CPA, can we make sure we get our aging report, we got our payables report, we have all these things, have them all dated the exact same day. I want them all at the end of second quarter or third quarter, so that they all balance and
you say that to a
reflect each
business
other.
owner, and they're like, wait, what did you say? And you call the CPA, and they're like, yeah, I'll get that to you by 6 p.m.
Yeah,
Download,
and ultimately, if I say it to a business owner, I'm going to get a P&L dated June. I'm going to get a balance sheet dated 2 years ago, and I'm going to get
Last
a
year's cash
receivables
flow
aging
statement.
dated today, because it's how much do people owe me today is the most important part at the top of most business owners' mind.
Yeah, for sure. All right, look, and the last thing I want to talk about before we wrap up is, I mean, obviously you've shown that you are as close to an expert, even though you don't want to say it, as you can be in the SBA world. But how far-reaching does Bonvenu Bank go? Are y'all Louisiana, or are y'all beyond that?
Sure. So, I mean, we're primarily Louisiana, right? So we have Southeast Louisiana. We have 4 locations, and then we have the majority of our locations up in Northwest Louisiana. And we do projects all over the state, but we will cross some state borders. We've got some clients right over in Mississippi. We've got clients in Texas. Some in Arkansas, just based on where we are. Sure. And we have some people where, so long as we have a direct tie to our client. So like if, I've got a Covington-based client, they own a business and they're buying a piece of real estate up in another state to go and work on a project, yeah, we can work on it. We've got clients who have projects in Illinois and Florida, Colorado, all over the place. Very and cool. So it just kind of depends on what the need is. But so long as they're our Louisiana-based client, right, and we have some access to them here so that we can work with them regularly, then we'll work with them.
Very cool.
Yep.
All right. Is that anything else you want to ask before we wrap up the SBA financing? I'm excited for people to hear it. I think this is a big deal for people.
Well, and this is barely the tip of the iceberg
sure.
on stuff, but it's one of the biggest things that I can't stress enough when it comes to that business acquisition. Like, plan early.
Please.
Start working with people. I mean, there are so many different caveats that go into it, from full acquisition, partial acquisition. There are so many different things that we didn't even touch on that, I would encourage people, get with your team early and often before you ever submit an LOI, before you ever try and make an offer on a business. Like, let's get that plan in place and make sure that you're ready to take that on.
We can all hope they're going to hear this. We're still going to get the LOI that's missing information, but we're still going to make it happen.
Yeah. We can all hope. Yes.
Yeah. Very cool. Thanks for coming on, buddy.
Absolutely. Thanks for having me.